welcome all our viewers to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Thursday, the 22nd of January. We thank you for joining us at this time on the show.
All right, let's tee off with your news now. South Africa's Nedbank Group has made an offer to acquire a 66% stake in Kenya's NCBA Group in a cash and share deal valued at 13.9 billion rand as it moves to expand its presence in East Africa. Under the proposed transaction, 20% of the consideration will be paid in cash, with the remaining 80% settled through the issue of new Nedbank shares listed on the Johannesburg Stock Exchange. The offer is based on a Nedbank share price of 250 rand. The remaining 34% of NCBA shares would continue to trade on the Nairobi Securities Exchange. If completed, NCBA would become a subsidiary of Nedbank while retaining its brand, local management, and public listing. In Angola, Opaya Group has opened a new vehicle assembly plant in Luanda, marking the resumption of car production in the country as it seeks to cut import dependence and boost local manufacturing. The facility, operated by its subsidiary Opaya Motors, has capacity to assemble 22,000 light vehicles and 1,000 buses a year, making it the only operational vehicle assembly plant in Angola. Opaya acquired the assets of a previous China-funded plant that had shut down. Buses will be supplied by Volvo from Sweden, while passenger vehicles will be imported from China through partnerships with Chery and Dongfeng. Opaya said it also plans to introduce electric vehicle production in the future. In the meantime, top Africa policymakers and industry leaders have been discussing the continent's food security agenda at the 2026 World Economic Forum. In a panel discussion, Fane Torre Hoseta, president and CEO of Yara International, spoke about investing in small-scale farmers and rural entrepreneurs and how economics can help build resilience where policy struggles to keep pace. Here are excerpts.
Already very good framing of the state of the food system right now and what that means for food security. And with extreme weather, that's the reality now, and it's facing farmers across the world. So it's about building a more resilient food system. And for me, resilience starts in the field, the farmer. And then we need to focus on how do we grow food and how do we create crops. And when we grow a crop, we take the crop out of the field and we bring it to the market. But we're also taking nutrients out of the soil, and we need to replenish that in order to provide enough nutrients for the plants to grow. The approach to that is very much commoditized, and we need to ensure a healthy soil. And Sam, you used to work in the White House. You were a policy advisor on nutrition. And if I told you that you could only give 2 or maybe 3 nutrients to people, I mean, what would happen to their health? It would be devastating, right? Why do we think like that for plants? If we rather think about soil as a living organism, which it is, and then do precision farming, we bring the right nutrients back into the soil, we get healthy soil. And when you have healthy soil, you get so many other things for free. You get higher yields, better quality crops, and it's much more resistant to extreme weather as well. I've seen it myself several times in this last year, what happens in droughts or floods, the difference between healthy soil and not. But then, in order to do that, we need to have incentives for farmers. We need to enable farmers to do this as well. And no farmer can do it alone. No input company can do that alone. So that's about thinking the whole value chain. And this morning I started, you as well, at PepsiCo, and we see how they're now working throughout the whole value chain, engaging the farmers.
In Ethiopia, Midrock Investment Group has acquired Addis Ababa's historic Wabi Shebele Hotel, planning a full renovation and upgrade under Marriott's Autograph Collection. The hotel will host international delegates and visitors during Ethiopia's 32nd UN Climate Change Conference, the COP32. In the meantime, Egypt says the war in Gaza has cost the country about $9 billion in lost Suez Canal revenues over the past 2 years. President Abdel Fattah el-Sisi disclosed the figure at the World Economic Forum in Davos, saying the conflict severely disrupted shipping through one of the world's most important trade routes. Cairo is calling for a permanent end to the war to safeguard global trade flows and regional stability. Meanwhile, a new era is emerging as tokenized assets, AI-driven systems, and quantum technologies begin to reshape global financial flows. At Davos, experts are exploring whether the financial system can adapt its rules and operating models to these advancements, or if rising competition and system complexity could heighten risks. Let's listen.
85% of those use the mobile as their preferred device. 85% of retail sales is also being done through the mobile. And what do I try to say is that most people do already work mostly through the mobile with us. So we are a digital bank in the core, or in the heart of what we do. But it also means that we still have a way to go to get people on the mobile more and more and to use the device more. That is for us the first step. So wire our customers to the mobile, because mobility will help the customer the most. Then the second step is, how can we make our customers' lives easier? It's in the end all about the customer. And what I'm most excited about what we can do, and that comes in a few phases. First of all, and that's AI. We are already using AI for about a decade, for example, in contact centers and with chatbots, with varying degrees of results. Sometimes it's good, sometimes it's not so good. But now with Gen AI, and especially agentic AI, we can improve the customer experience dramatically. It starts first internally with bringing new stuff to market, with coding for technology. Then there's a second layer that has to do with customer processes, such as lending processes or contact centers, to make life simpler in the day-to-day basis for customers. But then thirdly, when do we sell something or bring a new product to customer in a better way? And there I think agentic can help, and that's the third layer of AI that I think really can make a difference, because then it sits at the core of what we do, which is how to deal with customers. And that's why I'm very excited about AI.
In other news, South Africa is emerging as a key manufacturing hub in Africa, with exports under the African Continental Free Trade Area rising to 820 million rand in 2025 from 485 million rand in 2024. The growth reflects stronger intra-African trade driven by rising demand for South African mining equipment, household appliances, and processed foods. Experts say full implementation of the AfCFTA could boost intra-African trade by more than 50% by 2035, providing a significant lift to economic growth and poverty reduction across the continent. Finally, on News Now, JSE-listed Investec has launched a tender offer for its £350 million 2.625% callable fixed-rate resettable subordinated notes due January 2032 as part of efforts to optimize its debt and capital structure. The group will pay 98.85% of the principal amount in cash plus accrued interest, with the notes to be cancelled. The offer closes on January 29, with settlement expected on February 2. The tender is conditional on the issuance of new sterling-denominated callable fixed-rate resettable subordinated notes, forming part of Investec's proactive capital management strategy. I am Melissa Enoch, and that's it on News Now this Thursday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our markets round.
horticulture and the coffee, agro-processing, livestock, oilseeds, and the cereals continue to absorb millions on farms, in aggregation, in transport, cold chains, and the basic processing. Productivity is, however, uneven, but the employment footprint is large, and there is potential to expand into on and off farm jobs. Second, SME, light manufacturing and industrial parks. Textiles, garments, leather, and agro-processing have shown that Ethiopia can create large number of entry-level wage jobs, especially for young women, when production inputs are reliable. As an example, industrial parks in Ethiopia mobilized private investment and created over 90,000 jobs in 2022, with approximately 87% of these jobs held by women. Third, services linked to urbanization and connectivity. Construction, logistics, retail, healthcare, hospitality, and transport are among the fastest labor absorbers today. Within this ecosystem, aviation plays a catalytic role. Ethiopia's aviation industry is not only a major direct employer, it also enables entire services and production systems.
Welcome back to Money Moves. Let's now go over to Grace for today's market updates. Hello there again, Grace.
Thank you, Melissa. Let's now track how the markets traded today, starting off with the equities. In Nigeria, the NGX All-Share Index slipped by 0.52%, while the BRVM inched up 0.12% to 354.41. The Nairobi Securities Exchange gained 0.55% to 194.49. In South Africa, the Johannesburg Stock Exchange rose 0.74%, and in North Africa, Egypt's EGX30 climbed 0.90%, while Morocco's MASI advanced 1.25% to 18,882.99. Let's do a quick round on some of the Pan-African currencies. The Rand firmed 0.33% to 16.21 against the US dollar. The Egyptian pound eased 0.51% to 47.14, while the CFA franc was flat at 560.40. The Kenyan shilling held steady at 129. The Moroccan dirham dipped 0.05%, while the naira rose 0.20% to 1,422 naira 32 kobo as at 13:20 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude fell 1.72%, $64.12, and US WTI dropped 1.81% to $59.52. Natural gas surged 5.74% to $5.15, while Arabian gasoline slipped 1.84% to $1.82 as at 13:09 GMT. Now finally, to metals prices. Gold eased 0.33% to $4,821.50. Copper lost 0.75% to $5.72, and platinum was nearly flat, up 0.01%. Aluminium ticked up 0.08% to $3,119.10, while iron ore slipped 0.08% to $106.46 as at 13:11 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you so much for those updates on how the markets wrapped up this fine Thursday. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and bye for now.